Yo, 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 yo. What's going on? What's going on? What's going on? What's going on? I got to hold on, let me pull up my Discord. Pull up my Discord and send out the bat signal. Okay. Can't hear that. Pull up my Discord and pull out the bat signal. It's been a long time, man. It's been a long time since we did one of these. Been a long time since we did one of these. How y'all doing, man? How y'all doing, man? See everything looking good. I see Hit Learn and Share. I see FC in the building. Lump in the building. Rhonda. Who else in here? Y'all drop something in the chat so I can see who in here. Drop something in the chat so I can see who in here. We ain't did this in a minute, man. Give it a couple minutes for see if some more folk want to join us. Y'all talk to me, man. I'm in the oh man, did I leave this on? Oh. Y'all talk to me, man. Who up in here? Y'all feel free to pull up in the Discord if you got any questions. We're going to give it about another minute or so, and then we're going to get started, man. We're going to give it another minute or so, then we're going to get started. What's Lil Hawk in here? What's going on, Lil Hawk? For everybody who, I know Here to Learn and Share was here right at the beginning. And anybody else who was right at the beginning, I think FC was here. Could y'all hear the sound playing? What's up, Valentine? Could y'all hear the sound playing on the intro, the stream starting soon? Could y'all hear the sound playing? Yes, okay. All right, cause I don't know, for some reason I can't hear it on my side, like the way I got it set up in Streamlab OBS. I can't hear it, so I was hoping y'all was able to hear it. All right. We got Here to Learn, Share, FC, Lump, Rhonda, Lil Hawk, Valentine. Who else in here, man? I see more numbers than I see names. Who else in here? I see more numbers than I see names. I guess y'all ain't gonna drop nothing in the chat. Y'all ain't gonna put nothing in the chat for me, man. That's a shame. My feeling. What's up, Callio? Callio in here. What's going on, man? It's been a minute since we did one of these, man. I'm trying to holler at my folk, man. Trying to see who up in here. Again, if you are a part of the Discord, pull up inside. I'm in the voice. I'm in the regular voice. I'm in the regular voice chat. What's up, Deborah? Deborah in the Discord. Deborah just pull up in. I'm in the regular voice chat. So feel free to pull up in the voice if you know what I'm saying, if you want to share something, ask something, unmute, say something, you can do it in the voice. With that being said, we're going to go ahead and get to it, man. We're going to go ahead and put a Discord over here. I'm going to put the chat over there. The Discord and the chat are far to my right. They way over there. So, and I'm going to be looking to my left. I'm going to be looking to, oh, speaking of looking, y'all know how I do. I'm show and tell. I'm fun to do some show and tell. This is a good way to separate the wheat from the tell. Only true gang gonna stay around for this. What's up, Thomas? I see you. Show and tell time. I'm back. I'm back. Time for show and tell. Time for show and tell. I'm back. How y'all doing, man? Y'all, did you miss me? Did you miss me? Now, if you're in the Discord, you ain't gonna be able to see this because I can't share my screen on both. I mean, I can't share my camera on both. Right? So, this is my old MacBook Pro. Right? This is my old MacBook Pro. The screen went out on it. Like, I can't see anything on the screen. I got to hook it up via, I got to put like a little dongle on here to hook up a HDMI cable. Got to put a little dongle on there. But this is my old MacBook Pro. I bought it in like, I don't know, 2017, 26. I don't know. No, it was 2020. It was 2020. It was 20, yeah, like 2021, 2022. I bought this. Anyway, this is my old MacBook Pro. I be editing stuff on this via hooking to the TV. This is my new MacBook Pro. They went back. I think they went back to like the old style. I ain't gonna hold you. I don't like the old style. It's more blocky. You know what I'm saying? Because if you look at it, like it's the old style MacBook Pro, right? Because if you look at it, see how this one is like more thin and sleek like the MacBook Air, and this is like the old blocky style MacBook Pro. And then the screens, this screen is more thin like the MacBook Air, and this one is a little bit thicker. Like this is the old style MacBook Pro that they look like they went back to. And then this one got an HDMI port in it and an SD card reader in it. You know what I'm saying? I like that about it. And they went back to the old magnetic charging. Right? It went back to the old magnetic charge. They don't have the USB-C charging. Nobody went back. This one got USB-C charging. So now my MacBook and my iPhone got different chargers again. For the longest time, like my MacBook and my iPhone had the same charger. I ain't had nothing to worry about. Now my MacBook and my iPhone got different chargers again. But this is the new MacBook, and I got a picture of all of me familiar on there together. Right? On this one here, y'all probably ain't never seen it, but it was a picture of me, Cleanger, and the boys on there for my screensaver. But now for my desktop on this one, it's got all of us on here. That's from when we was visiting them when we was out of town, when we visit them. My babies. Show and tell over. Show and tell over. Y'all don't care about show and tell. Y'all came here to get to the price action. Yes. New toys, no Diddy. And that's what the young kids say. Oh, and this one here, they put MacBook Pro on the bottom now. I don't know if you can see it, but on the bottom down there, it says MacBook Pro now. Yeah, MacBook Pro across the bottom, down there. Right. This one didn't have that on there. That one ain't had that on there. They got MacBook Pro on the bottom. Yes, new toys, no Diddy. All right, let's get to. And then they got some kind of coating on there. They say it's supposed to be anti-fingerprints. And then I went with the silver. Cause some, you know what I'm saying. I like the gray, like the MacBooks look like. I like the gray. They had these right here, something they call space black, but I just went with the silver because I didn't want the space black. When I saw the picture of the space black with somebody actually with it, it didn't look that black. It looked like a dark gray, but I was like, I just get the silver. Anywho, let's get to it, man. Show and tell over. Let's go and look at the price action on. Let's go. It's been a while since we did this, man. We're looking at the intra-day price action review. Again, if you got anything, holla at me. Discord open, holla at me. Drop it in the chat. I'll get to it when I get to it if it's over there. If you're not part of the gang, say, what's up, Tim? I'm not part of the gang, and tell me where you from and how long you been tapped into the channel. You hear me? What's up, Sturdy AF? Let's go up to a weekly. What's Michelle Tucker? What's going on, Michelle? Michelle, you ain't working. Michelle say, I've been working, babe. I've been working. We're going to go up to a weekly. The reason why I'm going up to a weekly is because we going to get our levels. We didn't do it. I'm so sorry about yesterday. I totally forgot. It's been a minute since we, you know what I'm saying, we didn't had one of these, so I totally forgot yesterday. Right. It's right here. Is a new week opening gap right there. Bullish new week opening gap. Right, and that's this week's new week opening gap. Yep, 10-7. Right. That's this week's new week opening gap. And let me turn on my fancy dancy so y'all can follow the bouncing ball. My fancy dancy is on. Not going to extend these out to the right. Okay. And then I can see that price this week. This is this. You know what we'll do Monday and Tuesday. Since we missed Monday, we'll do Monday and Tuesday today. Since we missed yesterday. I jalapies. See that we came all the way down here between yesterday and today. And if we look over, right, we can see that we can see that we interacted with this new week opening gap right there. Right? So we'll mark that new week opening gap out because price interacted with it. Right? That's a bullish new week opening gap. We're just going through marking out the higher time frame PD arrays that we know price interacted with, and then we're going to go back and look at the price action to see how, and that's for 8 night. That's from back in August. Did we get down there? No, we didn't. That weekly calendar didn't touch that. So we did not get there. We did not reach that one. This one closed. We traded past this one during this time. This one also. Let's go. I think they overlap. So we just gonna mark this one because they overlap. Yes, they do. They overlap. So we're just going to mark that one because the price traded past it during this week. We came back down to this weekly BISI. Right. Weekly BISI there. All the way up to there. Why y'all ain't tell me I was humped over, man? Let me sit up. Y'all should have been like, Tim, fix your posture. You all humped over. Let me sit up straight. There you go. Don't I look more studious like this when I sit up straight? Hello, Deborah. Hello, Deborah. All right. Okay. So that's Sibby. That Bissy. I don't know why I keep saying Sibby. All right. We got a new week opening gap right here. The price passed by. What I said this was. This was for 923. What's happening to Blackout Davis? And then this right here is for 930. All right. And this right here is last week's high. Last week's high, box top, week. All right. Then we got last week's low, box bottom, week. All right. Go down to our daily chart. Daily chart. No imbalances or anything to mark out on the daily chart. We got Monday and Tuesday. All right, so looking here, right over there, Friday, Monday. So Monday, this Monday's that new week. It's the new week opening gap because it's the start of the week. Right. So that's Monday, new week opening gap, and then here's Tuesday, Monday to Tuesday. This is the new day opening gap down there. Okay. What's this for? 930. This for the 23rd. Okay. So we need new day opening gap for today. Bullish new day opening gap. For today, it's 10-8. All right. So bullish new day opening gap for 10-8. Okay. No daily imbalance. So let's mark out these highs. Cause we're gonna do Monday. So this right here is this right here is the alright, that's Friday's high. And then this right here is Monday's high. Since we're doing 2 days, I'm marking out bull. What's up, KC? Monday's low. All right. And so on Monday, price traded up to here. There's a new day opening gap over there, new day opening gap over there. Not gonna worry about that. We're gonna try to load up the chart with everything. That's I absolutely need to. Let's see. One there. Got one there already. That's close enough to that. Close open. Then there's one there. Right, let's see how I look on the lower time frame. Okay. So one there, and the other ones that need to be marked are marked. We actually got one down here that's got something to do with Monday. So 10-4, got these marked already. Open up 10-4. They open a gap on 10-4. Turn that on. All right. And 10-3. All right. Don't worry about that. And then 10-1. Just a little one there. Don't worry about that. All right, ain't gonna worry about that. All right. 4 hour. We had a 4 hour. This is Tuesday. Let me go back real quick. All right, let me go back to Monday. Take Tuesday off, so take Tuesday all the way off. Right, and go back to Monday. I guess y'all like, why you ain't had this ready before you came in here? Because I didn't. How about that? All right. Okay. So Monday started here, so I'm not gonna mark that out over there. This is where Monday started there. All right. Okay. While I'm doing this right here, what y'all want to do? Do y'all want to do like the whole day from 6 p.m. that night all the way through 4:30, or do y'all just want to do the New York session from like 9:30 to 4? If you want to do the whole day, put a 1 in the chat. If you want to just do the New York session from 9:30 to 4, put a 2 in the chat. Okay, we're on a 15-minute here. All right. So for the lower time frame, we got the higher time frames marked out. And for the lower time frame, what we're going to do, I'm going to mark in the PD arrays as we identify them for what it did. See, this is why I like to use rays, because with the rays, the information is always on the end. no matter where I move the screen to. But when I use the lines, it get like way out of the screen like that, and I can't see it. It get way out of the screen and I can't see it. All right, let's see who won it out. 1, 2, 3. 1, 2, 3, 4. Okay, how many people still in here? Cause I see 48 and I see 22. So I don't know how many people still in here. I'm assuming the 23 is the people that's still in here, because it's a 48 views, 23 concurrent viewers. So we got 1, 2, 3, 4 2s and 3 1s. Come on, can we get at least 10 people to vote? Because it's like kind of 50. It's 4 to 3. That's kind of 50-50 out of this small sample set, right? Can we get at least 3 more people to vote? 1 if you 2, right? So 1, 2, 3, 4, 5 2s, 3 1s, 2 more people. 1 or 2. Can we do the kill zones? Talk about inside New York. You voted too, Rhonda. So you want to look at the kill zones inside the New York? You voted for New York, so you want to look at all the kill zones inside the New York? Is that what you asking? All right, so the 2s win. So we're going to look at just the New York session. The 2s win. Is that what you asking, Rhonda? Can we look at the kill zones inside the New York session? All right, let's get to it. All right, so that's my all right, time frame. Let's find out what 9:30 at. Here's 9:30 right there. That's coming into 9:30 there. So we're gonna move this over so we can look at the chart there. That's 9:30 start there. Okay, so looking at where we are, going into the 9:30 open. Okay, going to the 9:30 open. This right here was our Jesus Christ. Right, we got our high up there from. Oh, that's today. That's the day we're looking at. So we need Friday. Okay, so there's Friday's high, right? We already poked. We poked our daily high. All right, I can move this out the way because we find out later that that's our daily high. We don't know that right now, but we find that out later that that's our daily high. So we'll move that out of the way over there. All right, so we got our daily high above us. All right, we got our daily high above us. We see that we've poked above our daily high, taking out this buy side liquidity over there. We did that during the Asian session last night. So as of now, that's our Asian high and our daily high as of now. We find out later that that's our high of the day. Right now, going to the New York session, we see that we have the sell side here. All right, that's our sell side down there below the 515 15-minute candle. So as of now, that's our London low and our low of the dealing range, right? From this high to that low, that's our dealing range right there. But Tim, why you say that's your dealing range? Because this high came up here and took out that buy side, and then this low came down here and took out that sell side, right? Buy side to sell side. Now you got a dealing range, right? You have a dealing range now. You took out buy side, you took out sell side. There's your dealing range. Okay. Looking at our dealing range, this is our sell side down here. Are these too small? Do I need to make these bigger? Can y'all see these? Let me see. Is that better right there when I do it like that? Buy side, sell side for our dealing range. We got relative equal highs up here. All right, so we're going to mark that out. Okay. All right. I'm making the font bigger for, people that's watching it on their devices and stuff. So hopefully that help out. All right. That right there was fried this high. So this is our new week opening gap right here. All right, that's what we started out. What was this? 260. All right, that's our current new week opening gap. All right, so our current new week opening gap, I'll just go ahead and extend this out. I said I wasn't going to extend it, but make it easy on myself. All right, current new week opening gap. And that right there is, all right, we got that on there from September 30th. Okay, so we got this was a 4-hour. This was a 4-hour SIBI that we had marked out. All right, 4-hour SIBI that we had marked out. Okay, we got 4-hour SIBI. We got right. We got a 4-hour SIBI there. We got some internal buy side. Well, we actually got a couple, right? We got some internal buy side here, right there. We got these. We got this swing high right there that made an equal high with this up close candle. Then we got this swing high that's inside this fair value gap there. So whenever I have like swing highs that's close to each other like this right here, but they're inside of a fair value gap, right? I kind of default to the lower one, right? Because this one wasn't able to take that one out, right? And we already, it's like we went to consequent encroachment of that fair value gap, and then we came back and just poked in like 1 or 2 ticks on both of these pushes back up into it. So I'm gonna default to that one there for like internal buy side liquidity, right? That's why the BSL is in the middle of the candle. In case anybody don't know how I mark it, if I mark it with the BSL or SSL on the end of the ray, that's like external liquidity for the range that I'm looking at. And if it's in the middle, that's internal liquidity for the range that I'm looking at. And then we also have internal liquidity up there. Right. Internal liquidity there. Also have some there. Right. Now, with all of these, I'm just marking these buy sides. With all of these buy sides here, right? Looking at what price has done here, right? I wouldn't be anticipating it to get back above this. If it got back above that, then that would be a bullish break in market structure. And I wouldn't be looking for it to come here because we haven't taken out a significant low. Like if we had taken out this low right there, then that would be different. Right? Then that would be different because we would have taken out the external liquidity for this dealing range right here. Right? But since we're still inside this dealing range over there, right, I would just be looking for some type of retracement to some type of premium. Right? So looking at what price has done, right, we can see we got back and forth delivery here, and we leave that area, right? So now what does that yield this to be? Class participation time, right? What does that yield this to be? Since we offered buy side and sell side delivery, then we left that area there. What does that make that be? Balanced price range, very good, right? So now that we say, okay, this is a balanced price range, right? We're going to kind of ignore these buy sides for now. Unless price get animated and get up there, we're just going to keep this internal liquidity there, right? And we're going to look at the area below the balanced price range, right? Let's go to that high to there, right? So now that's, look at that. You see how price consolidated right there? That's a good that's a good little tip to let you know, oh, I'm looking at the right price. I'm looking at the right dealing range here. I'm looking at the right range. Whenever if you just get your Fibonacci's and you run them from the high to the low of the area you want to look at, and you notice that price is consolidating right at the 50% mark already, you be I'm onto something. I'm in sync here. So, all right, looking at the this range here. So since we see this here, what we're gonna do, right? Instead of putting our buy side all the way up there, we're gonna drop our buy side to here, right? And we're gonna take off the relative equal highs because it's not relative equal highs there. All right, boom. So that's our buy side. That's our sell side, right? We got internal buy side there, and we're consolidating right here. So on a lower time frame, before we go into 9:30, we got, matter of fact, let's do this right here so I can go in and prep it. Why can't I cut it off? Okay, so now, right, that's our range there. So let's say we got internal there. Keeping in mind we got that high right there, but we're looking at these equal highs right here, because on the lower time frame, there's gonna be equal highs, and then we're gonna come here. We got internal sell side there, internal sell side. Right, then let's mark this one too, since we like that's gonna be something on a lower time frame, and then we'll mark that one there. Yeah, that's enough, right? So here we go. Everything pre 9:30 that we want to watch is watch now. So, you know, when we go into the day, you want to look at, I mean, when the session open up, you want to look at how price is reacting, right? This is the sell side when price open up. This is the short-term sell side, short-term buy side, right? We got some more internal sell side, got some more internal buy side, and then we got the buy side and the sell side down there. Want to see how price interacts with the buy side and sell side, and then, you know, make your trading decisions from there. So all the pre stuff is on the screen. We're gonna go ahead and run it all the way out to the end of the day. Run it out to the end of the day. And then we're gonna get into price. I'll just chop off what I don't need. All right. Now, looking at how price reacted to our levels. All right. We came up. We did take that buy side. We said we was going to keep in mind, right? Defaulting to the lower one, but it did take the higher one, right? So we'll go ahead and just mark that now, right? Went up to the high of the BISI. I mean the high of the SIBI. Did not make it. Oh no, that's not a volume imbalance. Move out of the way. And you see our price kind of hung around that 50% right there for most of the day. I'm gonna leave that line there just so we can reference that on the lower time frame. I'm gonna leave that line there so we can reference that on the lower time frame. Matter of fact, I'm gonna put a horizontal line there. Then I'll move this Fibonacci tool. Right. That's the equilibrium. Right, that's equilibrium for the range. All right. And we can see how price reacted to everything. I'm just looking here to see if there's any 15-minute PD arrays that I want to mark out. There's no imbalances. Price was efficiently delivered on the 15-minute throughout the day. On time it started making imbalances was down here. So throughout the day, the price was efficiently delivered on the 15-minute. All right, we have this. All right, coming into the 9:30 time frame there, we had an inversion fair value gap there. And we had an inversion fair value gap here. Right? Both of those were inversion fair value gaps coming into the 9:30. This 8:30 candle, right, created this inversion fair value gap. And this 8 o'clock candle created this inversion fair value gap. So we got two inversion fair value gaps right there coming into the 9 o'clock. So mark those out. And then yeah, that's it. Let's go down to the 1 minute and get it. All right, so 9:30, 9:30. We open up, right, and engage. Y'all know how I am on my lines. 9:30 we open up. We immediately wick up above the short-term buy side that we had noted. All right, immediate wick up above that. Then we come down, taking out short-term sell side on the 1 minute prior to the 9:30 open, trading down into this 1 minute order block from 9:03 a.m. Right, traded down into this 1 minute order block from 9:03 right now. Right, traded down into the 9:03 order block. Right, first candle came down. This is the entire order block here. Right, that's your full order block right there. Right, that's your full order block. I'll just mark out the full order block. I was marking out the last down close candle, but I'll just mark out the full order block. All right, so we trade down into the order block, respecting the 903 order block, and then we trade back up. Right, failed to take out the high from 930, and we just stayed right there hovering around that 50%. Push up to the low of the 4-hour SIBI on this 938 candle, and then we trade down, displace down, taking out the short-term sell side, right, from the open. Right, from the open, this still like the sell side that we marked out prior to open, like on the higher, like the one of the sell sides there, but we came down and took out the short-term sell side, and then we traded back up into this 942 SIBI. Looking at that 942 SIBI, that's the first presentation. That's the new fancy term that Michael has given. The first presentation, right? First of session, the first fair value gap on the 1 minute that was created, right? If you're looking at it, you say, Tim, that looked pretty big. I'm marking out the high of the, I got a lot going on this chart. Let me make these candles a lot bigger. Okay. So all of this right here, right, is happening inside these two 15-minute inversion fair value gaps. Tim, are we doing Monday's New York session, today's Tuesday? Yeah. I'm doing both. I'm doing both because I missed last night. All right, so it's a lot going on, so I'm fun to hide these two inversion fair value gaps, but let's remember that all of this is happening inside these two. Let's do this right here. All right, so this right here. Hold on. All right, let's do this right here. So we clean up some of this. Okay. Now, hit the red. Hit the red. There we go. I hit the red. Now I got a million lines. Okay. then this one here. Okay. No. And these dotted. Oh, I could just do this right here. Okay, so I had to do it so it makes sense in my mind. And now, inside the top, most of it is happening. Most of this consolidating is happening inside this top inversion fair value gap, right? Which is this area right here, right? That's the top inversion fair value gap for those who need to see it visually. Just remember that's top fair value, inversion fair value gap. And this area here is the bottom inversion fair value gap. Right there. Okay. Oh, you know what I could have did? I could have made it gray. But too late. Now, so we the first presentation, right? This is the actual SIBI here, right? That's the actual SIBI right there. But we have a volume imbalance on the bottom, so we incorporate the entire imbalance from the SIBI and the volume imbalance. So this is our first presentation fair value gap. All right, so price comes down once we trade back up to the low of the 4-hour fair value gap on this 938 candle. Right, price starts to drop down, starts to displace. Right, get down below short-term sell side and get down below the sell side that we was watching to see how price reacts. So what price has done, once it opened up, it engaged the buy side first that we was watching. Once it engaged the buy side, it displaced down, taking out the sell side that we was watching. So we've gone from external to external, right? We've gone from external to external. Okay, now that we've taken out the sell side, push back up to this bearish order block at 940, right? Body to body, the bearish order block is there. Depending on how you mark out your order blocks, the body shows the bulk of the volume, right? The body shows the bulk of the volume, but if you want to do it wick to wick, right, this is your order block, wick to wick, right? So that's wick to wick of the order block, right? And that's body to body of the order block, right? So we just mark it out, wick to wick, leave the entire order block, trade it up, mean threshold of the entire order block, wick back down, closing in the lower quadrant of the first presentation fair value gap. All right. Price then trades down into this BISI that was created at 946. I'm not going to be marking out everything because it's getting real ugly on the chart right now, right? Matter of fact, I'm going to move this order block. Remember, this is 903 order block that we traded down to there. So I'm going to leave it there. We can see that price is still interacting with the 903 order block. Okay. Trade down into this BISI here. Trade down into the 946 BISI. And 946 busy, trade back up, back into the order block, and round consequent encroachment of this 947 candle that ran the stops slash traded back up into the mean threshold of the 940 bearish order block, traded back up above consequent encroachment, back into that 940 order block one more time, and then price displaced away at the beginning of the macro window, right? At the beginning of the macro window. So at 950 macro window, we are here. Go over to 1010. 1010. Highest point there. This is the order block there. Nope. Matter of fact, I'm just going to take this one here because we already ran this buy side, so I'm going to put that there. Okay, so we're inside the macro window there. Got everything marked out. Okay. So 950 macro window starts, right? We drop down. 952 price trades back up into this 946 inversion fair value gap. This 951 candle created that inversion fair value gap. Remember, that was the BSI that we used to trade back up to consequent encroachment of the 947 wick, right? We traded back up into that inversion fair value gap, failing to get to consequent encroachment of that 951 candle, right? Traded back up into the inversion fair value gap to just above consequent encroachment, and then wick down, respecting it, failed to get to consequent encroachment of the wick, right? And then we continued to give up the ghost, right? As you see, this 952 candle was an immediate rebalance. But Tim, why do you say it was an immediate rebalance? Because anytime the candle closes with a possibility of creating a fair value gap, in this case it had a possibility of creating a bearish fair value gap this big, because that's where the candle closed. This candle opened up with a possibility of having a bearish fair value gap that big, but this candle traded back up and went and traded into this 950 candle, right? And that trading back into it just don't make it an immediate rebalance. When you're looking for it to see if it is an immediate rebalance, you want to see speed in like the next candle, at least the second candle over, but you want to see speed getting away from in the opposite direction. And here we go, we got speed in the opposite direction, getting away from that immediate rebalance, trading all the way down just below the low. And remember, this blue line here at 0.9250, that's the low of that second inversion fair value gap, right? Remember, this dotted blue line, orange line, dotted blue line, that's the top inversion fair value gap. Solid blue line, solid orange line, solid blue line, that's the bottom inversion fair value gap. The 15-minute inversion fair value gaps that we have marked out. Drop down below the 15-minute inversion fair value gap on the bottom one, came back up, closed above consequent encroachment of that, right? Displaced up, came back up to, remember, failed to get to consequent encroachment of this 951 wick on this 952 candle, traded back up above consequent encroachment of that, up to consequent encroachment of the first of session fair value gap into this bullish order block there, right? Like, Tim, there's no fair value gap over here. How you calling that an order block? Because we got an immediate rebalance right here, right? You got immediate rebalance there. You got immediate rebalance there. That was a possibility to make two civvies. But since price was in a hurry to get down here, it didn't feel like retracing back later. It immediate rebalance dropped down to go where it needed to go below these lows, right? So now you trade back up into this bearish order block, trade up, consequent encroachment of the first in session fair value gap, and then we pull back down into, consequent encroachment of the bottom inversion fair value gap again. Then we kind of consolidate here for a little while. Then at 10:01, price displaces away, trades all the way back up, taking out the buy side from that 947 candle, right? Inside that bearish order block again, traded up, took out the buy side, that 947 candle there. So now what we have done at this point right here is we have gone from external liquidity to external liquidity right there. So price here was being bearish, right? Because we came here and we went from external liquidity to external liquidity, right? And it was being bearish. We continued down, right? And then once we came down here on this leg here, right? Remember, we came here, right? We went external liquidity, internal liquidity, external liquidity, right? So now that we came to this external, right, when we come back up here, poke above that high right there, we've gone from external to external, symbolizing a reversal maybe coming, right? So took out the external liquidity, right, inside the macro window. So inside the macro window, we took out sell side and we took out buy side, right? Traded back down to the old sell side right there, right down to the high of that bottom inversion fair value gap. Remember that top blue line was the bottom, was the high of the bottom inversion fair value gap, right? Traded back down there, hung out there for a second, price displaced away. When we got right here, we created a bullish fair value gap right in line with the first of session fair value gap, right? So we created a bullish and we got volume imbalance on the bottom. And if we look right there, the consequent encroachment of both of those are right there, maybe a tick away from each other, right? So the bullish fair value gap in the at 1013 and the first of session fair value gap, they overlap. Consequent encroachments are right there, right? And then price goes up and we create a very tiny fair value gap right here, right? At this moment in time, right now, can somebody tell who was that? And I think it was it Here to Learn and Share? I think it was Here to Learn and Share. At this moment in time, right here, when this candle right here closed, creating that fair value gap right there, what does that make this fair value gap here? I think Here to Learn and Share asked me that the other day when we was talking about this. What does that make that fair value gap right there? The 1013. Is there anybody in the Discord? Nobody's in the Discord to unmute. Breakaway gap. Very good, Rhonda. Rhonda, I mean, Here to Learn and Share. When you start spelling Here to Learn and Share, RHONDA. All right, so we got a breakaway gap there at the 1013 candle, and then we created another fair value gap there at 1014. Almost got an immediate rebalance, right? And then We, boom, right, took off, right? Now that we have made this move, right, just think about all of this move right here, right? Breakaway gap, almost get an immediate rebalance, and then we take off right there. When this candle right there closes, right, what is this candle right here telling us, right? Where do we look when we want to figure out what a candle or a PD array is telling us? This candle right here, what is that telling us? First of all, where do we look when we want to know what's price telling us, and then what is it telling us, right? Where do we look first? Where do we look? Put in the chat. Where do we look? I know it's only like a 3-second delay, so somebody should have been typed something by now. Left, very good. We look to the left, right? We look to the left. Now, what is this candle right here telling us when we look to the left? Very good. We look to the left. What is this candle? What is that candle? When we got breakaway gap, almost get immediate rebalance, right? Don't quite get it, and then boom, we take off like that, right? So what is it telling us? What is that candle right there telling us? Right here. Come on. Come on. Remember, you're looking to the left. Right? Came down. Right? Stopped at the inversion fair value gap. Displaced up. And what does that mean? What does done with that area? What? Give me some terminology. Give me some ICT terminology. Not rebalancing. There you go. Balance price range. P, y'all know what I'm saying, right? So this candle here, leaving that area, is letting us know that the algorithm is looking at that as a balanced price range. Why? Because we offered sell side, buy side, sell side, buy side. Notice I'm stopping at the bodies, right? Wicks do the damage. Bodies tell the story, right? Right? Come here, right? And then, boom, we blast off, right? So, looking at the bodies, right? So now, let's look at all the bodies inside this balanced price range, right? So this is the counter that left it, right? So now, this right here, that's the highest body, right? Gonna come over. That's the counter that left it. So we're gonna stop here, right? And this here, yeah, that's the lowest body right there. Right there. Okay. Boom. Right? So that's our balanced price range right there. Okay. Then when we come over here, before coming up to that sell side up there, what is that? What is that line for? Why did I put that? Oh, is that equilibrium? No, I named equilibrium. Let's go figure out what this line is for. That's equilibrium right there. Why is that line there? I don't know what that line is for. Get out of here, line. I don't know what that line is for. I don't know what it was for. Do anybody remember what that line was for? I don't know what that line was for, but, right. So that's our balanced price range there. right? And then price, we come down. After we leave that area, price goes up, pokes the buy side liquidity at consequent encroachment of the 4-hour SIBI, pulled back down, stopped where? At the higher end of the balanced price range, right? You'll be looking over here at this little area. If you want to look at this area as a bullish breaker there, you can. It's so much chop slop in there. I don't waste my time looking for PD arrays inside chop slop like this. But if you want to look at this area here, right, as a bullish breaker, you can. Right there, we trade back down into it. Right there at the high of the balanced price range. All right, trade down into the wick of the bullish order block here. Trade back down into the upper quadrant of this bearish order block, right? That's why I said if you want to look at this area as a bullish breaker, that's cool, because when you get on the upper side of a bearish fair value gap, right, you either going 9 times out of 10 it's going to either be, if it's in a area like this, right? Well, I say 9 times out of 10, because you can have a order block that's in the middle that's not at a pivot like this right here. But if you got one that's at a pivot, it's either going to be a bullish mitigation block or a bullish breaker, right? When you get back above it on that side, or you can look at it as a inversion order block because you're on the top side of the bearish order block, right? So we trade back down into it there, then we push up, taking out the buy side once again, and still respecting, the bodies are respecting the 4-hour SIBI, right? And then when we get up right here at there, when we get over here, this is when the 4-hour candle opened. So this, the prior 4-hour candle is respecting this SIBI. It's closing well below that SIBI. So now we start a new 4-hour candle. We trade up into it. The bodies of the candles are respecting the SIBI. Trade back down into equilibrium. Right, we come back to equilibrium. Trade back down. Just taps the high of that breakaway gap from earlier, from 1013. Taps the high of that breakaway gap. Trades back up, right? Takes out the internal sell side, right? But fails to take out the high. Right? Did not take out that sell side there at the peak of the move, right? That was the, buy side. That was the buy side of the peak of the move from this move going up. Did not take out the buy side from the peak of the move. 16. Okay. Then price pulls back down. What we pulled down, took out the sell side, pulled down, kiss the inversion fair, the breakaway gap, traded into the top quadrant of the first presentation fair value gap, traded back up, took out the internal sell side, failed to take out the buy side, internal buy side, failed to take out the buy side of the entire move, creating relative equal highs with this 1034 high and that 1030 high. Right, price trades back down again, taking out the sell side one more time, right, trading down into consequent encroachment of that top inversion fair value gap that we have marked out. Bodies of the candles are respecting the first presentation and that breakaway gap. Bodies of the candles are respecting them. It's down deep in the lower quadrant of it, but the bodies of the candles are still respecting them. Then we trade back up, right? Push up into this 11 o'clock SIBI. Hold up. Let's come over here. We forgot to look at this. All right. Move there. Okay. Okay, so macro window. All right. Coming into the macro window. All right. Price. Let's back up. All right. So when we drop down, take out the sell side once again, trade down to the first presentation, right? Trading back up, right? Pushing back up. We have no imbalances here. So price pushes up, starts the macro window time frame, pull back into the range, right? Then price displaces up, creating a breakaway gap here at 1054, right? Traded back down into the 1055 BISI, right? Then price pushed up, like we said, took out the internal sell side, created relative equal high, did not take out the external sales, internal buy side, did not take out the external buy side, created relative equal high, stopped at the high of the 4-hour fair value gap, right? This is the end of the first hour of the new 4-hour candle, right? And so then we displaced down inside the macro window, coming down again, taking out the sell side, right? Creating 1, 2 SIBIs, and on the way down, creating 2 SIBIs, created 1, 2 inversion fair value gaps with the BISIs, right? Continue now, took out the sell side, retraced back up into the you can look, this is bearish breaker here. You got a high, low, higher high, right? Traded back up into the bearish breaker and dropped down one more time, touching the sell side once again, right? Coming down just below consequent encroachment of that top 15-minute fair value gap, inversion fair value gap that we have been talking about from the beginning, right? Then price retraced back up, coming up into the lower SIBI from 11 o'clock, right? The 11 o'clock SIBI consolidated there for a little while. That was right at the old buy side that we had took out back over there. And it's also inside the premium, the upper 50% of that breaker area. This, if you, it's not the exact breaker there. So the breaker would be here, right? If we were looking at it, the breaker would be there, right? So we're working inside that breaker right there, right? But that was that old order block, right? That was the old order block, but now you got the bullish breaker. You're working that top 50%, the premium, right? And we pushed up into consequent encroachment of the 4-hour SIBI. Also reprice the top 1059 SIBI, trading up to the last up close candle of the bearish order block. Price dropped back down once again, right around mean threshold of that bullish breaker, right? Traded back up into the order block and volume imbalance over here. Dropped down once again to the lower portion and consolidated in the lower portion of the bullish breaker. Traded back up to the low end of the 4-hour fair value gap, and then price displaced away, dropping back down to equilibrium. Came back to equilibrium, traded back up to the same area, order block, breaker, all of that. We're on the bottom side, right? Now we're on the bottom side of it. Then price displaced down again, taking out the sell side once again, that old sell side, taking out this sell side from the first macro window, not out the first macro, but from the 11 o'clock macro window, and revisiting that old sell side, right? And the bodies of the candles, as you see, are respecting the mean threshold of that original order block from 903. Right? Original order block from 903. Now, and then that's during lunchtime. So lunchtime, price did its thing. Now we're gonna look at 130. Right, so price did its thing. So now we come over here to 130. So now we got the 130 time frame here. Right, we're looking at 130. So from 130 we come here and we make us 130 to 2 o'clock. All right, 130 to 2 o'clock. This is our opening range for the afternoon session, right? All right, just like the morning session has an opening range from 9:30 to 10. The afternoon session has an opening range from 1:30 to 2 o'clock. Right? So now we're looking at, and just like, because I think Hidden Learner, she asked me about that today. She asked me about a trade that I posted, and she was like, what time did you know when things were going to change or switch or something like that? But when you're looking at price, especially if the morning is like, see how the morning is like just in this tight range, not really giving nice clean price action, right? In the afternoon, what I like to do is look at what we do in the opening range, and if it give me some kind of sign, I'm looking for a reason to trade off of PD arrays made during this opening range. That's a gem that Michael he talk about it from time to time, right? He dropped that gem a while back, you know what I'm saying? But he talk about it from time to time, and that's why you take notes and remember stuff, right? So looking at this here, we traded up to equilibrium, right? We traded up here to equilibrium, and what was this right here? Oh, that was just a wick. Get out of here. That was just a wick. Okay, so we traded back up to equilibrium. We're hanging out there. We're right here on that top inversion fair value gap. We're in the premium area. The orange line is consequent encroachment. The top dotted blue line, that's the high. The bottom dotted blue line, that's the low, right? So at 130, we open up, we drop down to the low of it. Then we trade here in the premium part of that inversion fair value gap right around equilibrium, right? And then price breaks up, right? Taking out this this high, right? Taking out this short-term high right here, poked above that, stop there at the old buy side liquidity, right? Stopped up there, that old buy side liquidity. And then price displaced down. Now, looking at what we did inside this area right here, right? We got us a bearish breaker here, right? All these candles right there, them down close candles right there. That's your bearish breaker right there, right? So we come down, got a low, high, lower low. Right, got a bearish breaker right there. We have an inversion fair value gap right there, and we have a bearish order block right here, right? So those are your PD arrays that was created inside this window here, right? What's up, Robinson? What's going on? All right, so those are all the PD arrays that's inside there. All right, so we got a bearish breaker. All right, we got a bearish breaker. We got an inversion fair value gap. right, bearish breaker, inversion fair value gap, and then a bearish order block. All right, got a bearish order block there. Those are all the PD arrays. Right, those are all the PD arrays that's created over here inside of this. Right, and why am I picking out those right there? Right. What somebody Flapper Gunday. I hate you. Can somebody tell me why I'm picking out those PD arrays right there for what's being made inside this area? Why I'm not over here digging in looking for, do we got any why I'm not looking at this bearish order block right there, why I'm not looking at this potential bullish breaker right here, why I'm not looking at this stuff over here, why did I pick those there? Macro, no, not macro, not the macro, even though it's during like macro time, right? That's very good. I didn't pick it because of the macro time, but that heightens the importance of it, right? So let's mark that out. Valentine said macro time. We're gonna mark that out. All right. That heightens the importance of it. Displacement, yes. Right. This displacement right here is signifying what price wants to do. All right. And so now that price has shown us what it wants to do, what do we do? Once price gives that displacement, once price shows you what it wants to do, right? What do we do from there, right? Because what is this right here? What did price tell us here? Right? What is that? Somebody tell me what that is. We're not gonna take this long on today. We're just gonna go through today. I'm like really breaking down yesterday, and then we just gonna breeze through today, because we done been on here for a long time. All right, what is that right there? We done been on here for an hour and a half. What's this right here? What's that move there called? Judas. Is that a question? Are you asking me a question? Huh? Are you asking me a question? All right. It is a reversal, but what is that move called? Are you asking me a question, Valentine? Judas? All right. It is reversal, J. Gill, but what is the move called? Is that a question or is that a statement, Valentine? Don't get scared now. Let me see how far behind this is. Statement. Okay. Judas is a Judas way. Let me see how far behind this is. It's all blurry. Because it's inside the little YouTube studio. I was trying to see how far behind this was, because it's taking y'all a long time. No, it ain't the Payal. Okay, so we get a Judas swing. Now that we got the Judas swing, right, and the market has tipped its hand of what it want to do, now that we got that move, now what do we do after that? Right? We start looking for the PD arrays that we want to try to trade off of. Right? So, and what PD arrays are we trying to? Yes, look for entry. You're looking for your entry PD arrays, right? We're looking for your entry PD arrays, right? So, I marked out those. We have a breaker, right? We got an inversion fair value gap. We got a order block, okay? When were they made? Inside the opening range, right? As Valentine pointed out, they were made also inside the macro window, right? So you got a double power up on them, okay? Because it's inside opening range and it's made inside a macro, right? So now that's why we picked out those PD arrays, because the market has tipped its hand, and this is the area where we're trying to look to get in. Now, price comes back up into the breaker, right? And we get an institutional order flow entry drill. Well, not really institutional order flow entry drill. You do on just the SIBI itself. But when you look at the entire imbalance, including the volume imbalances right there, right, it digs a little deeper into it. But if you look at just the SIBI itself, you can see that it's an institutional order flow entry drill, right? And you say, hey, Tim, I don't trade breakers, right? I don't trade breakers. It didn't come back to my inversion fair value gap, right? No harm, no foul. Once price shows you what it wants to do, just because you didn't get this entry, you can always get other entries, right? It didn't come back to my inversion fair value gap. I didn't notice that little small SIBI in there that I could have got short off of, right? I could have got short off of that little SIBI up there, or I could have got short, I missed it. I just missed it, right? When price drops, when price respects that SIBI, right? Price respects that SIBI, and it drops, starts to drop down, boop, 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 right? Where did this candle right here close? Right? Where did this candle right here close? This candle closed below what? Right? When you expecting price to be bearish, what do you want to see as far as candles? Right? You want to see it respect premium PD arrays, and you want to see it respect what kind of candles? I mean disrespect what kind of candles? You want to see it respect the premium PD arrays, and you want to see it disrespect what type of candles? Up close candles, right? You want to see it disrespect up close candles. So you missed this entry right here, right? Price drops down, right? We drop down right here. We're closing below that candle, but we're still respecting this candle here. So you patiently waiting. We create two up close candles there, but what are these up close candles respecting? They're respecting this down close candle right here, right? We're respecting that down close candle. We're not closing above 50% of that down close candle. This very next candle here, what does it do? It closes below all four of these up close candles, the huge ones and the little ones, right? And it creates what? A SIBI right there. There's your SIBI you can get short off of, right? Your mandatory stop for a SIBI is where? Where's your mandatory stop for a SIBI? Where's your safe stop for a SIBI? Right? Let me know. Mandatory stop for the SIBI is where? At the high of what? Mandatory stop for a SIBI is at the high of what? Safe stop for a SIBI is at the high of what? Come on. Mandatory SIBI is at the high of what? I'm sweating. I'm sweating under these lights. Come on. Don't nobody know? Somebody jump in the Discord and talk to me. It's taking too long for the comments in the chat. If don't nobody know, somebody type don't nobody know. So I won't be sitting here waiting for nothing. High of the SIBI candle. It's the high, the mandatory stop is the high of the SIBI candle. So this candle right here, the mandatory stop would be right there. That's your mandatory stop. Where's the safe stop? At the high of what? Yes. The mandatory stop is here. We'll put stop loss. Mandatory stop loss. And then, okay, where's the safe? Where's the safe? Safe stop, high of the order block. I'm just talking about the SIBI itself. The SIBI just, I ain't talking about no other PD array. High of the first candle. No, the safe stop is going to be the high of the swing. The high of the leg that the SIBI is inside. Right? The safe stop is the high of the leg that the SIBI is inside, right? So we're coming down. See this? We're coming like price started here and dropped down. The swing high above the SIBI, right? So this is your SIBI. This is your swing high right there, right? So that's your safe stop, right? This is your safe stop loss. I can't put an S there. Right? So your safe stop loss is above the swing high above the SIBI. And then your mandatory stop is at the high of the SIBI candle. And then if it's a BISI, it's the safe stop is at the low, swing low, right, below the BISI, and then it's at the low of the BISI candle if it's the other way. All right, got that. And then price trades back up into the fair value gap, right? Fair value gap, and then the propulsion block, right? It actually traded all the way back up into the candle of the order block, but we traded back up to the fair value gap into the propulsion block, and price displaced down, gave up the ghost all the way down to the sell side, the that sell side right there that we had marked out from the London low earlier in the thing, right? Taking out that sell side from the London low. And then tomato, the rest of the afternoon, it was going down, right? We spent a lot of time on that. So now we're just going to quickly go through today's price action. We ain't going to spend a whole lot of time on today's because we spent a heap of time on Monday's price action. All right. Okay. So going straight down to 15 minutes. Straight down to 15 minutes. Get over here to 9:30. All right. So we get over here to 9:30. Right. As we come into 9:30. That's 9:30 there. Boom. As we come into 9:30, we can see that we have sell side right here from the London. Right, we got sell side here from the London, and we got sell side down here from the Asian. Right, so we got internal sell side there, and external sell side there. Okay, and we look up here, we got internal buy side there. And we got external buy side up here. Okay. All right. So internal buy side, internal sell side, external sell side, external buy side up there. All right. That's for the overall range. Now, looking at what we have here thus far. Okay, coming into it, we have almost made an inversion fair value gap that closed right at the high of it. All right, on the 15-minute, closed right at the high of that right there. Almost made an inversion fair value gap there. Okay, we're going to look at that high right there. Going into 930. And then look at these equal lows here. Going into 930. All right. We blasted away from this area right here. All right, so looking at this area, balanced price range, don't want to see price digging down into that too deeply, right? Especially since we created a BISI there and got a potential of creating another BISI there, right? Looking at this to maybe act as a breakaway gap, but we'll see how that play out. All right, so watching that. And then we would drop down and get our eagle on, girl. All right. Okay. All right, that's the pre-bail analysis. That's what we're looking at right there, right? Want to see price attack, engage some kind of liquidity, and give a clue of what it wants to do, right? Close right at the high of that. Pretty much looking at this is going to be an inversion fair value gap. We close right at the high of it, starting to create BISIs inside this consolidation there, creating equal lows, right? Create equal lows and then poked above that high. All right, let's go ahead and put the meat on the bone. Right, put the meat on the bone. Okie dokie. All right, and then we will jump down to 1 minute. Okay. So 930 right here. We see we trade down to the the BISI that we marked out. Bodies of the candles respecting consequent encroachment. We trade just below consequent encroachment there, right? But bodies of the candles pretty much respecting consequent encroachment. We push up. that 935 candle. Looks like that's our first presentation. Yep, that is. That's the 930 candle one. Yep, first presentation fair value gap there on the 935 candle. Got a small volume imbalance there. So we're going to mark that out first of session. There, right there. And that was at 935. Okay. Then price hung out there inside that first presentation fair value gap. Here at 946, we dropped down below this swing low here, trading almost to the low of that BISI that we was watching. I can't remember what time it was. That 9 o'clock BISI. All right, that 9 o'clock BISI. Traded back down to the low end of that 9 o'clock BISI. Right there, make this big again. Right, then price moved back up, consolidated again inside the first presentation fair value gap, pushed up back to the buy side, the initial buy side that we was watching. Right, traded back down into the volume imbalance again, traded back down below consequent encroachment of the first presentation fair value gap, and then price displaced away with high aggression during this macro time. Right, so this is our macro window here. Our macro window there. Sorry for taking so much time on Monday. I went kind of crazy on that, right? So price displaced away during the macro window, starting here at 951. We pulled back that 952, because 951 we traded back down into the first presentation fair value gap, and then price displaced away, right? All up candles until 958, created a down close candle. And then 9:59 and 10 o'clock, we pushed up into the buy side liquidity, that other internal buy side liquidity there from the entire range. Remember the entire range we was watching? That was the internal buy side liquidity that we marked out. And we marked out the internal sell side, external sell side, internal buy side, external buy side. All right, so we traded up to those relative equal highs at that internal buy side on the 10 o'clock candle there. Right, so yes, on the 10 o'clock candle, traded up there. Then we consolidated a little bit at that buy side, pulled back down to the low end of the bullish fair value gap there. Yes, dipped down below it into the wick of this bullish order block from 958, right? Staying inside the lower quadrant of that bullish fair value gap. If we was to put it in the fourth grade, right? You see right there at the lower quadrant, bodies of the candles right there at the lower quadrant. Now, but still got that calibrated eye, right? Stuck around the lower quadrant, pushed up, took out the short-term high, right? 1027, traded back down to the upper quadrant and the volume imbalance, right? Upper quadrant, volume imbalance, and then price pushed away, right? Traded back down into the order block, looking for an immediate rebalance. This one kind of dilly-dallied a little bit, took a little bit longer than I liked, but right, this next candle came down, immediate rebalance. Right, we had this one candle, had them two candles, but on the third candle we did take away. Right, I like to see it in this candle or that candle. But on the third candle, we finally moved away with some aggression, right? So we got that immediate rebalance there, taking out the buy side above the macro time frame, and then creating a BISI at 1034, trade it back down and work that BISI right up into 1042, where we displaced away again, right, falling short of the buy side liquidity, the external buy side liquidity, right, falling short of it. Did not trade back down into the BISI from 1042, right, came down just below consequent encroachment of the 1043 wick, right, respecting that wick without a problem, displaced up, tapping the buy side on the 1047 candle, right, creating a BISI at 1046 on the way up. All right, so now we got this 1046 BISI here, and we tap the buy side. All right, tap the buy side, pull back down into the 1042 BISI, right? Pull back down into the 1042 BISI there. Then we trade back up, like created an inversion fair value gap, like the 1050, it going to the macro time. Come here, macro window. Need to borrow you. All right, so this is our macro time, 1050. All right. So, oh, that macro time ain't do nothing. All right, that macro time ain't do a thing. All right, so we came down to the 1042 BISI, traded back up, took out the short term buy side, right? Traded back up into, is that a small little BISI SIBI there? Yeah, got a small little SIBI there, plus a volume imbalance. Right. Got a small little SIBI there, plus a volume imbalance. So we wicked above, that little SIBI there. Hey, little SIBI. Right, wicked above the SIBI and the volume imbalance. Bodies of the candles respected it nicely. Right, price trades back down, creates another SIBI here at 1105. Right, trades back up, wicks above that level. First we trade up to the 1105 SIBI, respected. Then we wick above it, right, and then displace down, creating a SIBI here at 1108. Right, what's significant about that 1108 SIBI? Right, what's significant about the 1108 SIBI? Right, the significance about the 1108 SIBI is that price, right, price came down and displaced away, right, price displaced away, creating a SIBI, immediate rebalance, and a SIBI, right, all coming at the end of the macro time frame, taking out the sell side right there, right, that hints at potential lower prices, right, hints at potential lower prices. All right, so now you have your SIBI, right, immediate rebalance, and then a SIBI there. Okay, trade back up into the SIBI, wick above it, come down, taking out, right, the low there. Right. Come down, taking out the low there. Boom. After we take out the low, price comes back up, right, displaces up, creating a fair value gap, comes up into that SIBI from the macro, right, drops down, right, but fails to take out the sell side right there, right. So price 1120, use the macro SIBI, to drop down, fails to take out the sell side, never reached the sell side. Right, push back up, closing at the high of the 1124 SIBI and working the top of this 1120 inversion fair value gap. Right, this the inversion fair value gap that we're working right there, just working that inversion fair value gap right there. Work it, work it, work it, work it, work it, work it, work it. All right, push up, take out the buy side, kiss the fair value gap one more time, trade back down, institutional order flow, entry drill on the inversion fair value gap. Right, price displaces up, comes all the way back up here to that old 1 minute fair value gap from way over there at earlier that morning, and this is inside the 1150 to 1210 macro over here. All right, so inside 1150 to 1210 macro, we push up to that SIBI inside that 1 minute inversion fair value gap, right, just above consequent encroachment, right around the upper quadrant. Right, did not take out the buy side, failed to take out the buy side. Right, so price came down here, right, failed to take out the sell side, pushed up, failed to take out the buy side, right, and then during the macro started to displace down, right, create fair value gap, then displace down, taking out the sell side that it failed to take right there on that drawback from 1120 to 1126. Right, came down, took out the sell side inside the macro, lunch macro. Right, now skipping over to the afternoon, 1:30. 1:30, 2 o'clock. Okay, 1:30 to 2 o'clock window. All right. That's our opening range for the afternoon. All right, so price has come down, taken out sell side. All right, price has dropped down, taken out sell side, come back down into this that BISI from earlier. Right, you see we came down to consequent encroachment of it right there. Respect consequent encroachment of that old BISI right here. Right, came back down into it. You can either give the credit to that BISI, or you can dig inside here and look for some kind of order blocker. So whatever PD array you want to give the credit to over there, pick it. It's over there. All right, so we come down to that BISI during lunch. Price trades up, come down, respects the 112 BISI here at the high of that 10 o'clock BISI, right? Macro time frame. That's a macro BISI right there, right? And we're over here. This is another macro window right here. So we inside a macro window, respecting that 10 o'clock BISI, right? And we're over here inside this macro window here, traded down into that BISI there, traded up, respect the 112 BISI, price goes up, takes out the high. We're inside the opening range for the afternoon now. So now let's blow it up. We got our bearing. We came down, took sell side, respecting the 10 o'clock macro BISI, price going up, showing that it's in a buy program. It's respecting the discount PD array, right? Pushing through the down close candles, respecting the discount PD array, pushing through the down close candles, right? And so we come back down, right? Kind of consolidating here inside this. We got a BISI there from 134 that we kind of consolidating inside of. Drop down below it, right? Drop down below it, back down into the range, and then we displace away, right? Drop down into the range, we displace away, right? We don't come back to this fair value gap, right? We go up, create a breakaway gap there, right? Breakaway gap at 152. We're inside the macro window. All right, so we come over here, 150 to 210. 150 to 210. Right, so inside the macro window, we go up, take out the buy side, right? Create a breakaway gap, consolidate there for a couple minutes, push up, create a BISI right here, right? Create a BISI right there. What's the significance of that BISI? It's created during macro time. If I can find it, right? Created during the macro time and created during the opening range, right? So you got a BISI there, created during the opening range. And if we look over here, that BISI is created at the same time that we create an inversion fair value gap right there. That's including the volume imbalance. So that candle creates it with the volume imbalance, but not including the volume imbalance. That BISI candle creates the inversion fair value gap. So we have a inversion fair value gap from a old macro time frame. This is 103. We got a BISI from the opening range and from the 150 to 210 macro, right? So significant. And then price goes up, takes out the takes out the highs, don't make it to that high there. We take this high, but we fail to get to that high, right? Price pulls back down, starts to consolidate right here at the high of whichever one of these PD arrays that is. I can't remember. It's consolidating right there at the high of this breaker, right? You got this breaker here, right? The whole breaker is actually all the way down here. This is the entire breaker there, right? So if we go to breaker, right? That's your entire breaker right there, right? So we're just consolidating in the upper portion of that entire breaker, right? This is the last up close candle of that breaker. As you see, we're consolidating right there at the last up close candle of that breaker, right? We drop down to, that BISI and that inversion fair value gap. So we got the inversion fair value gap and the BISI. The BISI, remember the BISI was here, right? The BISI was there. The inversion fair value gap is over here, right? So drop down here to the inversion fair value gap from the 1250 to 110 macro, push back up, right? Create an inversion fair value gap on that 222 SIBI, drop back down, taking out the sell side, right? Poking the sell side and dropping back down into the 157 BISI, right? And that's from the 150 to 210 macro from the the afternoon opening range, right? We touch that, and then it's off to the races all the way back up to the external buy side, and then the rest is history for the rest of the day. I thought we selling the premium and buying a discount. We do. We do selling the premium and buying a discount. What you talking about over here when we was up here on the? What you talking about the selling the premium when we was in the premium part of this up here? Which one you talking about? You have to come in the. You have to come in the Discord and tell me which one you talking about. That's it. We done been on here for 2 hours. Sorry for keeping y'all so long. Do anybody got anything for me? I promise we will not be staying on this long all week. I went kind of deep.
Yeah.
Yeah. Staying on this long all week. I went kind of deep. Yeah. I can hear me.
Oh, hold on, my voice was delayed for like a couple seconds. Can you hear me?
Yeah, I hear you.
Oh, okay. No, I was you when you were saying when I asked you about the discount and the premium.
Yeah.
You was pointing at the bottom part and saying the buy side. I thought that was the sell side on them swing lows down there. I mean, I thought that was the buy side. You were saying sell side down at the bottom part where the swing lows. This was a few minutes ago. You know, my time was off, so I might be throwing you all the way off.
I've been saying the wrong thing all night, so I've been calling bisses, sibbies, and buy side sell. So I've been saying the wrong thing all night. I'm hungry, but we do buying the discount, selling the premium. So you know what I'm saying? Like it's like when we look at like okay, like when we come down here, right? We're dropping down to a discount PD array, and you buying down here in a discount, and then coming back up, right? And then when you come back up here, and you see, okay, now price has left this area here. Price has left this area here, right? So now you're looking at this as a balanced price range. So now you're just looking at price from the balanced price range up to here, right? So because you don't want price to come back down to the balanced price range, so we're looking at, right, you got a swing low right here coming out of the balanced price range. So from there to there is coming back down to a discount of that move and then going up. You see what I'm saying? Even though we're high in price up here, right, based off what price has done, right, it's finished with this area here. So now we're looking from there to there, and we're consolidating
I dig that, but you see where that what you just circled? Yes. You were down there saying, so what you just circled down there is the buy side, right? Not where the consolidation.
This green line right here?
Yeah, right there. That's the buy side, right?
Yeah, that's old. Yeah, that's old buy side. That's old buy side, right?
Okay.
Right.
Okay,
so,
you were saying sell side. I just wanted to make sure.
Because we got sell side here. You see what I'm saying? You got old buy side there, but now that you're above that buy side, you've created sell side above that buy side. So now you're dropping down below this sell side and coming down to this discount PD array right here. Right now, this old buy side, that old high, that's now a discount PD array. You see what I'm saying? Because you're above it. You've gotten above it. And so now you come back down to the discount PD array, which is old buy side, taking out the new sell side. Right? You're taking the new sell side out and touching the old discount PD array, which is this old high. Old buy side, that's a new actually when you get up here, you're just swimming in the liquidity pool, because once you get above this high, now you're in the pool and you're just soaking up liquidity, right? And then you're waiting for the algorithm to show you which way it want to go. Right now that we're in the pool, right, what do you want to do? Right, we drop down below this sell side, take them out, because while you up here, you letting shorts accumulate, You letting buy side accumulate, you letting sell side accumulate, right? We attack the sell side, and then we respect the discount PD array, and then we move back above there. So what does that give us? That give us a big, long, ugly Judy swing. You see what I'm saying? Once you get back above that high. You see what I'm saying? And once you get back above that high, you see price didn't come back down below that high. Right? Because now the Judy swing is intact, pull back down into the range, and then going up.
I'm with you. Yeah.
This is my biggest struggle, but I'll ask another time. No, go ahead. Go ahead. I ain't doing nothing. If don't nobody want to stay on, they can drop off. I don't care. What you got, E-Rock?
Can you hear me?
Yes.
Okay, so this is where I struggle the most. Now, when you show, like once we got above the first buy side where that orange box is over by the 2 o'clock, like after 2 o'clock, that consolidation there.
This one?
And hold on. No, keep going to the right. That one there. Okay, and so you
This
see
one?
we consolidated. We came down a little bit. And there was a fair value gap.
Let me make this bigger. Let me make it bigger, right? So you talk about this area right here.
Yep, that consolidation area right there.
Okay.
So, but no, that one. Over to the left a little bit. The first.
This one?
My TV is I'm delayed, so it might be. Yeah,
Okay,
right
hold
here.
on. Wait a minute. Let me do this right here. I'm gonna share my screen in the Discord, so because it won't be delayed.
Oh, okay.
Like click on the live on there.
Yeah, there we go. All right.
Yeah. Okay, so this one here.
Yes.
Okay.
No, wait, to the left. Sorry.
This one?
Over, right in there. Mm-hmm.
Okay.
So we came up, we took out some buy side.
You talking about right here? We poked above this.
Mm-hmm.
Okay, we poked above that. Okay.
We came down and we're making fair value gaps as we're coming down.
Okay.
And that one where your cursor was right there, that one that took out those equal lows, and it was that took out the that took out the equal lows. You went back up and did not take out the high and came back down again. So then right let me see. Right in there. Okay, so right in there. Now you took that was a fair value gap, right? And we took out those equal lows.
Mm-hmm.
We came back up, didn't take out the high, and made 2 fair value gaps coming down, right there.
Okay.
And that took out that low, that swing low right there, and it went into that fair value gap. But how did you know that? Like, how would you know that fair value gap is going to be? How do you feel we're still? I guess bullish, because to me that seemed like a change in the state. I mean, not a change in state of delivery. I mean, that too, but a break in market structure.
Okay. Remember when I was back over here and I said price came up, right? And we took this buy side, but we didn't take that one. Right? Remember when I said that right there? Okay, so now we're gonna back out. Right? We're gonna back out. And we're going to we're going to squanch it up like this right here. Okay. And then let's do this right here. We're going to start right at the area we talking about over here. When you say we came back down there.
Yeah.
Right there. Okay. So we're going to squanch it up, and with it squeezed up like this right here, right? Let's look at what price did, right? Price came up here above an old high. Right, traded back down into a macro time frame PD array, and then displaced away and poked above the external buy side. Right, we just barely poked above it. Right, and so then price came back down, and we were consolidating here. Right, we took out this sell side there. Right, then we pushed back up to that buy side, and then we came down. And we took out this sell side and came back down to, right, that same discount PD array. Now, this right here was our breaking structure, because this is an old high. Remember, that's an old high right there. right?
Okay.
So in essence, right here, the only thing we did was get a break in market structure and then retrace back to that break in market structure, right? Don't get caught up in all of this right here, right? So we came up, this is our break in market structure, right? This is our break in market structure. So only thing we did was get a break in market structure, then come back down to the break in market structure right there. Right? So now we come back to the break in market structure and we start pushing back up and we start taking out highs, right? Taking out highs, right? Have we reached our terminus yet? Right? So if we come back to the break in market structure and start taking out highs, what does that mean? Right? What does that mean if we come back down, we come down to our anticipatory reactionary point, right? And we come back and start taking out highs, what does that mean? We're on what side of the model?
Now we're on the buy side.
Yes. And so we're taking out highs. So now we should be looking for reasons to buy, right? We should be looking for reasons to buy, right? As long as we're on the right side of the market maker buy model, right? Until we get to our terminus, right? We're looking for reasons to buy. Once we get to our terminus, then we want the market to show us what it want to do. Because when we came down here, when we got our breaking market structure pulled back, once we came up and start taking out highs, now the market is showing us what it want to do. It's showing us it wants to go up, right? If you're really aggressive, right, you could have got in there, right? You could have got in here because this right there was this was your change in the state delivery here. Right, that's your change in the state delivery there, right? But if you're aggressive, you could have got in down here, right? Because you got, you know what I'm saying, you got this balanced price range right there if you're aggressive, right? But, you know, me, I'm not super aggressive. I want to see it based off of the algorithmic teachings. Now, that's one thing. That's just looking at what price has done. Okay, now that price has shown you what it want to do, right? And you're in whatever session you in, you just want to know, you know, what time to be looking for certain things. Now, what are we looking at? We looking at macro times and opening range. We got macro time over here. We got something from a macro time over here that we reacted off of. There's a macro time in here. And there, matter of fact, let me put this box over here so we can see all our macro stuff, right? So let's come over here. And we're going to put our, okay, so, all right. Okay, boom. No, I got to go further down. That macro went crazy. Man, that macro went ham. He went crazy. Okay, so we got, all right, we got macro time here, macro time there. Macro time there. This is our opening range for the afternoon. Okay, so now that we know price we had a break in market structure and we've come back down to that break in market structure. Remember the way the concepts are taught, right? Unless something has changed, the way Michael teaches is if you trade away from the PD array, come back to it, and this is when you're entering. Right, you can use more advanced stuff to, you got a break in market structure, use it and then go, right? That's the way he do it. He do stuff like go, you know what I'm saying, come back and then add when it come back. But the way he teach it is go away from it and then this when you looking to get in. Don't get caught up in all of this right here, right? So now that we're looking at our macro time frame, right? I mean our opening range, right? We're in a macro window right there. And so price has had a change in the state of delivery here. For anybody who don't understand why I say that's change in state of delivery, right? This is your order block, right? That's your order block. We got consecutive down close candles. When you trade above the opening price of that last up close candle, that's your change in the state of delivery, right? If it was only one, down close candle. If it was only one down close candle, then that would be your change in the state of delivery. But since you got multiple down close candles, when you trade back above the opening price there, that's your change in the state of delivery right there. Because this is your entire order block. All of these candles here. That's your entire order block right there, right? Because they're consecutive candles. Let me just figure anything. Good enough. Okay, right? So that's your entire order block there, and that right there is your change in the state of delivery right there. Okay, and look at the sensitivity of that area right there. Right, see the sensitivity of that. You got a fair value. That's the high of a fair value gap right there at that change in state of delivery. Right, you can see like all that sensitivity right around that change in state of delivery there. Right, then we drop down into this lower, look like, is that a fair value gap? I don't know, but we drop down back into the consolidation, into the wicks, because when you consolidate and leave the last down close candle, when leaving, that's your order block. We trade back down into the wick of the order block there, right? We got the wick of the order block there. We trade back down into, right? If you of the mindset, or you like to use the highest, the ones with the highest whatever, you know what I'm saying? But it's all in the same range, right? So there you go, right there. Trade down into the order block, and then you leave away. So you start to put together, and it's not going to be for every scenario, but it's just, I'm just giving different things. I'm giving different things you can always look for signatures, right? In this case right here, right, we got a change in the state of delivery, right? We respecting the discount PD array from an old macro time, right? We're inside our opening range, right? And inside your opening range, you're looking for PD arrays that you can use to form trades off of, right? You're only looking to form trades after the market show you what it wants to do. So we got a change in state delivery. We consolidate here, and then we expand away, right? Which PD array is expansion coupled with, right? You remember which PD array expansion is coupled with?
The fair value gap.
That's retracement.
Oh,
The order block. Very good.
Order
block. Yes. Right. So we consolidate, we expand, right? And where do we go? We go to an order block, right? We consolidate it with, first of all, we got a change in state delivery, right? And it's a bullish change in state delivery, right? So you get a bullish change in state delivery. So that right there has you looking up, right? The best buying opportunities is going to be below a low. Smart money buys below the lows, right? We consolidate, right? And since we're looking up, the best buying opportunity is going to come off of a Judas swing, right? So we got the change in state delivery, consolidate, and then we drop below the lows, right? When we drop below the lows, we stop at an order block, right? And then we immediately reverse, right? So we go expansion, order block, and then reverse. So we got consolidation, expansion, reversal, right? Right? So we got consolidation, expansion, reversal, right? And what I said, the way the concepts are taught, you looking for it to trade back to the area to participate. You can use more advanced entries to get in, like, you know, here, like on first touches. You know what I'm saying? You can use more advanced entries to get in on first touches, but we got the consolidation, right? We got the expansion, we got the reversal, right? And now that we got the reversal with this displacement, now the market has shown us what it wants to do. It traded above this high, right? Didn't hit this high yet, didn't hit that high yet, right? Started consolidating here, right? And we're inside, still inside the macro window. Then we go up and we poke that high right there, but we still haven't hit that high. Now that we poke that high, what has price done, right? We consolidated, we expanded, we reversed. We still haven't got the retrace yet. You see what I'm saying? We ain't get the. Will you always get the retrace? No, you won't. Will you retrace back to what you want to retrace to? No, you won't. But now that we got the expansion, now we looking for clues of what price wants to do, right? We came down here and left this area, right? So we looking at this as a balanced price range. Price comes back down, right? Doesn't dig down into the balanced price range, right? We consolidate here, we push up, right? Don't come back to it. We consolidate there, we push up, right? So now that was a balanced price range. We didn't come back here. Now that's a balanced price range. So now that all of that, we see all of this right here is a balanced price range. Now our attention should be focused here because that's the lowest low, that's the highest high above the balanced price range. You see what I'm saying? And then now that we got our range that we're looking in, right? So now we're looking to the left for potential PD arrays to enter in on. We have a BISI that's inside the opening range, that's inside the macro window, right? We have an inversion fair value gap that's from an old macro window that was created during a macro window, right? So you got a SIBI that became an inversion fair value gap, macro to macro, right? So you got weight there on that. You got weight here on that, right? So here's your area of trying to get short, which is stop loss down there because price shouldn't go there no more. If price goes there, it's either manipulation or you're wrong, right? And so, and this right here, when you like, how do you know this fair value gap is going to hold, right? This is our this is our range right there, right? This is our range here, right? What is this right here? What is this right there? That's a what? What kind of fair value gap?
A SIBI.
That's a SIBI. What's a SIBI?
Down close. Fair value gap.
Yeah, a bearish fair value gap. Where is that? Where is this bearish fair value gap created at?
In the premium.
In the premium. Are we looking to sell?
No. Well, I mean, I was, but no.
Yeah, but I'm just saying, in this case here,
we're supposed to be looking to buy still.
Yeah, because we're still on this side. We're looking to buy, right? So if we're looking to buy, this fair value gap that's created in the premium, right? You're looking for any sales off of this to be short-lived. You want to see them be short-lived, right? So we come down and we create this SIBI, right? But we still haven't reached anything, right? We haven't come to any PD array on the way down, right? We didn't get to the we did get to the inversion fair value gap. I give you that, right? We come to the inversion fair value gap, right? And then we push back up, right, to the SIBI, and we immediately create an inversion, right? We immediately create an inversion. That right there is showing you that this SIBI is weak. You see what I'm saying? We create an inversion, but we still haven't traded back down to our discount PD array. You see what I'm saying? We haven't traded back down to it, so that's still not counted out. You see what I'm saying? We came here, and we went back up, and then we dropped down, and then we came into the discount PD array, right? So we're looking to buy down here. You see what I'm saying? Because this is the range we're looking at, and we're looking to buy. So when this came here, if that would have left without you, and you were waiting at this fair value gap, it's just one of the things where you got to look for another entry over here if you still haven't hit the terminus. But if it come down to the discount and didn't make it to your PD array, you just wait. You know what I'm saying? You just wait, especially during times like this. Like, if we went like in front of CPI or something like this right here, I'm pretty sure this would have dropped down in there then and this went.
Yeah, and I think that's the main thing that's messing me up this week too, is because we are waiting for CPI and the price, you know, the price action is all these wicks and retracing and the consolidations is just really confusing.
Yeah. Now, going back to, just want to visit it real quick. You were saying that you was looking for a reason to sell here. Now, was that just based off the fact that we took out these lows right here, the reason why you was looking to sell off of this?
Yeah, because we took out the lows. We didn't like take out a high. We just took out those lows and then we created that fair value gap, that big SIBI. Then when we came up through the SIBI, we inverted it, but we still didn't take out any liquidity. And then created another SIBI off of it and closed below the swing low. And so even though it's going into that fair value gap, it still seemed to me now that we would be like retracing back down, or we would just like selling back down now, not continuing to go higher, but retracing deeper or something.
Yeah, I get it. It's just one of them things where too zoomed in. That's all it is. And I do it myself. You know what I'm saying? Because when you're looking at it, if you're looking at price like this right here, it look like, it makes sense. You know what I'm saying? It makes sense. You've taken a high, you've broken below this low, you're failing to get back above that high, you broke below that low again, right? So just looking at it like this without the knowledge of we're coming back down into a PD array from the macro time frame, right?
Yeah.
Because it's like when you're looking over here, the only thing it is like we, like I say, we didn't come back to this balanced price range, right? We didn't come back to that balanced price range. So now we're looking for, right, this area here. This is the area we're looking to be buying in based off of what price has done coming this way, right? Yeah. So until you hit the terminus, right, of the market maker model, right? If you on the right side, just look for reasons to do whatever that right side is. Now you can trade against the grain, but it's going to be short lived. Right. Any shorts you take over here, they're gonna be short lived. Like you would take a short of this order block, take it back to that low. You know what I'm saying?
Yeah.
Take a short on this fair value gap, right? Take short on this fair value gap, take it back to this low right here. That wouldn't be good risk to reward because you're going, your stop would be here and you're going to there. You know what I'm saying? But you just going, it's short lived. You want, because the moves you can hold are going to be on the buy side. Right? Because if you look over here, once we came down, once we started going up, all the moves up were much longer than the moves down. You see what I'm saying? All the moves up are longer than the moves down because we're on the right side of the market maker buy model. So if you, whenever you look at something and you determine, okay, I think it's time to sell or I think it's time to buy, right? Stay on that same time frame, right? Stay on that same time frame and just squeeze your chart up like this right here. Right? Stay on that same time frame and squeeze your chart up like that and be like, does it make sense to be buying right here? Does it make sense to be selling right here? Right? Okay. And when you're looking at it, if you're looking at it and you can see, like, just looking at this right here, just looking at that there, if you can see, right, I haven't taken out the liquidity of the move, then I shouldn't be looking for a reversal yet. You see what I'm saying? Because this high is the high of the entire move. This high and this high, that's just like, see, so you got that swing high, that swing high, that swing high, all of that's inside that price leg right there. That one. Right. And then, so if you, and then just like it, even coming from here to there, right? Coming from here, you got this, that's the main swing high right there. And when this price leg come all the way down, right? When you get all the way to the bottom, right? You see you got a swing high there, you got a swing high there, you got a swing high over there, you got a swing high there, swing high there, swing high there, swing high there, right? All these swing, and once we start going back up, right? We took out that swing high, right? You shouldn't be looking for a reversal yet. Right? Because this swing high puts you on that side of the move. You see what I'm saying? Yeah. And then we take out that swing high, right? Where can you go back to? Right? We got a big range right here. We even got some short-term sell side there. If it got overzealous, we can even come down and take out that low. You know what I'm saying? Because that's a swing
And
low
that's what I thought
inside
was
this.
what happened
Yeah.
too.
You see what I'm saying? It's like
Yeah.
it could, if it got overzealous, it could go there. But based off what it did here and what it did there, it's unlikely, right? Because you're
Yeah.
leaving clues that I don't want to go down there, right? So then you take out that high, right? You take out that high, you pull back down into the range. Then you can take out that high, you can take out that high, you can take out that high. Once you take this high out, then you can start saying, okay, are we going to go back down because you've completed the market maker buy model? You see what I'm saying?
Yeah.
So whenever you're thinking,
Okay.
okay, I'm ready to get in, if you thinking I'm ready to take a short, I'm ready to take a long, just squeeze your chart up, and then just for people who need to see it like me, right? So we're looking at it on the going short side, and then let's flip it over, right? So now for the going long side, right? And you coming back down, like until you come down here and take out that low, right there, right? Don't be looking for a reason to reverse. You see what I'm saying?
Okay.
Don't be looking for a reason to reverse because it's like you haven't. It's like you know what I'm saying. You haven't gotten back down to the low. You've come down. You took out that low, right? We pushed up here, came down, then we took out that low. Then we came down. We took out that low. We kissed that low there, right? Pulling back into the range a little bit. Then you'll come down and keep taking out. You know what I'm saying? Put the meat on the bone, right? There we go right there.
Yeah.
You see what I'm saying? We come down, we take out that low, we pull back up into the range right there when we hit that fair value gap. Then we drop down and we kissed, right? This is an old low, but we ain't take out that's an old one that we took out here, but we ain't took out the new one yet, right? We stopped there, we pulled back into the range there, and then you can see it there again, right? You see it there again. We got fair value gaps up here. We got a fair value gap there. We got a fair value gap there, right? We even got a volume imbalance there, but price, right? This right here, we was offered buy side and sell side, and we left that area right there, right? This right here is the imbalance after we left that area right there. Price traded right back up into that breaker over there, right?
Yeah.
You see what I'm saying? That breaker's job is to stop price from going up, right? Yeah, come on.
Okay. Yeah, this was helpful. That's my biggest thing is trying to is understanding when we're gonna be retracing or if we're gonna be like when we're consolidating to continue or consolidating to reverse.
Yeah, and consolidating. Okay, so I'm glad you said that. Consolidating to continue, right? You're gonna be consolidating like at, let's just say, a order block or a breaker or a mitigation block where we haven't taken out a significant level of liquidity. Like how it's just showing, we haven't made it to the the terminus yet, right?
Right.
You haven't gotten back to, let's come here, right? And like one little trick I like to use sometime, right? A trick I like to use sometime, like we understand we're on the right side of the market maker buy model, and this is the terminus, right? See how we consolidating right here, right? We let me get all this stuff out the way. Move all this out the way. Right? Clean chart, right? Get your eyeballs used to seeing it. Right? So this is our terminus here. Right? If I get it up there. Right? That's our terminus there. Right? Because we're on, right, that right there. When we trade it above that high right there, let us know that that low was the smart money reversal. Right?
Right.
When we trade it back, well, that change in the state of delivery right there let us know that this was the smart money reversal. And then we traded above that high right there that gave us our bullish breaking market structure. Right? So we got to change the state of delivery and then a bullish breaking market structure. Okay? So when this is our terminus, if you see here, we're consolidating right? Where are we consolidating? We consolidating right over here, right? You see what I'm saying? We're reclaiming order blocks. You see what I'm saying?
Yeah.
Remember when I taught reclaim order blocks, right? We're on this side of the model, and now we're over here consolidating when we're reclaiming order blocks over here somewhere. Because over here we created order blocks and went down, and then over here we come back up and we're reclaiming those order blocks to go up. You see what I'm saying?
Okay, that makes sense. Yeah.
And then until you get to the terminus, you're not looking for a reversal. I don't care how deep it retrace, right? until you break market structure to the downside, you're not looking for a reversal. Because when you look at how deep, like let's just look at this little price leg right here, right? We're gonna go for this entire leg here. Let's just say if price hadn't created a balanced price range and we was looking at this whole area as a range, right? If I put this on OTE, right? Price, you see how far a 80% retracement is? Let me put a line right here. Right? I put a line right. That's 80% and that's 62. So that's OTE. That's the optimum trade entry there. This is the optimum area for a retracement to happen, to go long off of in this little price leg there. So no matter how deep you pull back until you get a bearish break in market structure below there, right? You don't look for a reversal. You see what I'm saying?
Okay. That makes sense. Yeah, because I have and that's helped me some too with looking at premium discount and seeing how far down like the discount is of a leg and seeing like, okay, for it to come all the way back down there, like that's, but then sometimes it doesn't, so I don't know. But I need more screen time and practice with it. But this was helpful, and that makes sense. So I just need to not get scared and freak myself out until we get to the terminus of the leg, or of the market maker buy model, or sell model, whatever.
Where's it? Right there. This is, I know we still on YouTube, and this is for anybody that be hating, be like, I hate that I talking right there. I did actually trade in that same area we was talking about over here this afternoon. This little area over here, when we came back down into that fair value gap there, right? You can see right over there, that same little area there. I got long there. I wanted to get long down here, right? And I wasn't sure if it was gonna go, so I put on one contract there, and then when it did come down to there where I wanted to, you can see I put another contract because I was trying to get long on that BISI right there. Right, so I put one on that BISI, and then this small BISI there, and then I accidentally took one off right there. I accidentally took one off there, and then because I was gonna take one off here and then hold it to go higher. So I accidentally took one off there, and when it traded above that high, I just moved it to this down close candle right there, and then it came back and stopped me out there on the other one. Because my intention was to take one off here at this high and leave one to run all the way up to the other one. But it, you know what I'm saying? And that's in that was inside one of my and for anybody to be like, that's the wrong color. That's one of my funded futures demo account. I mean eval accounts that I'm trading right there. Right? I mean that's not real account. Somebody was on my YouTube page the other day talking about you're not profitable and you're not decent. Man, get off my page, man. You trade ICT and I'm so glad I don't trade that. I'm so glad I'm profitable. Yeah, but you on the internet looking for the next best thing. You on my channel.
Right. I was about to say.
You on my channel. Yeah, but yeah, just do that. Like squanch it up when you be like, okay, it look like we going short. Squanch it up and look and see, does it make sense to go short right now? Right? Does it make sense to go short right now? And then just say like, even right here, let's just say right here, if we didn't make it to the terminus, right? If we don't make to the terminus, we just took out this high, right? Because you don't have to get there, right?
Exactly.
Until you take out that low right there, right, don't put a lot of faith in SIBIs fair value gaps that you're making until you get that market structure shift. You see what I'm saying? Until price drops back down and takes that out, then you could be like, okay, yes, we are targeting this low right here.
Okay.
You see what I'm saying? You got to let it, you're going to have to let it move. Like, the biggest thing I had to get over was wanting to be a part of the initial move. The initial move is just the tipping of the hand. The initial, the first little, that's just the tipping of the hand. Once it tips his hand, then you start looking for a way to get in on the pullback to a discount or on the pullback to a premium if you're buying or selling.
Yeah, that's my problem. That's one of my many problems.
Yeah. And then looking at the higher time frame, right there, this is the 130 candle we had there. And if you look at like what was going on the 15-minute, right, on thing we did was pull back down. Came back down to a 15-minute fair value gap. You see what I'm saying? Came down right there to well, if we gotta imbalance down there so we can do it like that. It'll be the upper quadrant, and if you don't fill in the it's the consequent encroachment. You know what I'm saying? But all thing we did was trade down to a 15-minute fair value gap, right there.
Yeah, just right? Consequent encroachment and went up. Yeah. Okay. Yeah, that's helpful. Well, thank you, Tim. I appreciate it.
You're very welcome. All right. Anybody else? Somebody said, great discussion, E-Rock. What does he mean by terminus? Sam B, terminus is like where you expecting price, the end. Like the end of the move. That's the end of where you look for price to deliver to. That's Picasso's house. Terminus is Picasso's house. Right? So if you're looking to take out that buy side, that would be terminus. That's the end. Right? If you're looking to take out this sell side, that will be terminus. That's the end of the move where you're looking to take out the liquidity. Hey, hopefully this was helpful to somebody. I'm sorry for being on here for 2 hours and 48 minutes. Tomorrow we doing the Q&A with the mentees. It's supposed to be a homework review, but don't nobody be doing homework no more. Since I stopped posting videos, don't nobody do homework no more. So it's just gonna be a Q&A. I can hear D right now talk about it. I do be doing the homework. Stop saying that. I be doing the homework. Hey man, take advantage of the day while you can. Tell your loved ones that you love them. Even if you got an uncle that get on your nerve and you got to bless him out every now and then, take advantage of the day. Tell your loved ones that you love them, man. Go into the next room, hug your spouse, hug your kids, hug your dog, thump the cat, kick the gerbil, play with the salamander, whatever you got. Let your loved ones know that you love them, man. Until the next time, which is going to be Thursday at 7 p.m., mentees tomorrow at 7 p.m. Y'all be safe out here in these trading streets, man. Y'all know who it is. It's your boy, Aranya Grande, a.k.a. Big Spider. You see it on the shirt. You see it in the back. I'm gone, man.